we're in the middle of this huge AI revolution, right? Where giants can fall and new players can rise overnight. But what happens when a 40-year-old titan like Intuit, the company behind TurboTax and QuickBooks, decides to bet its entire future on leading that revolution? Well, that is the high-stakes story we're going to unpack today.
Look, you've almost certainly used one of their products, maybe for your taxes, maybe for your business. But behind those logos you know so well, there is a massive, multi-billion-dollar bet on artificial intelligence that is completely transforming the company from the inside out. Let's dig into what that actually looks like.
So first, let's just meet the players on the field. We're talking about a financial powerhouse. You've got TurboTax, which is basically synonymous with tax season, QuickBooks, which is the absolute backbone for so many small businesses, Credit Karma, your own personal finance guide, and MailChimp, the marketing engine for, well, countless creators and small businesses. This isn't just a random collection of apps, you guys. It is a massive ecosystem with 100 million customers.
So what is this big AI bet we're talking about? This is not about just sprinkling a few cool AI features here and there. No. Intuit is basically tearing up its old blueprint and rebuilding its entire foundation with AI right at the core. It's a huge, risky, and honestly, a potentially revolutionary move.
And look, don't just take my word for it. The company's CEO, Sasan Goodarzi, he put it really plainly. He said, "We're leading the disruption in the AI era." I mean, that is a public declaration. It's a loud and clear signal that they plan to be the one doing the disrupting, not the one getting disrupted.
So how does this actually work in practice? Well, they're calling it done-for-you experiences, which is a really slick way of saying it's a blend of AI automation and real human expertise. So in TurboTax, you've got AI agents helping you file. For QuickBooks, it's AI-powered financial management. And over at Credit Karma, AI is personalizing all those financial offers. The goal here is pretty simple. Make really complicated financial stuff feel totally effortless.
All right, an ambitious AI story is great and all, but you know what really talks? The numbers. So let's pivot to the financials and see if the performance actually backs up all this AI hype.
So here's the first big piece of evidence, the company's own projections. They are forecasting double-digit revenue growth. Now, for a company the size of Intuit, that is like a supertanker accelerating like a speedboat. It's a really bold statement of confidence in their AI strategy.
And you want to know a huge driver of that growth? It's TurboTax Live. That's their hybrid service that pairs AI with human experts. Its revenue skyrocketed by 47%. I mean, wow! This isn't just adoption, it's a stampede. It shows that customers are absolutely embracing this new AI-powered way of doing things.
And if we zoom out, the whole financial picture looks pretty darn robust. They've reaffirmed their guidance, projecting revenue north of $21 billion. But here's the real kicker. Look at their profitability metrics, like operating income and earnings per share. They're set to grow even faster than revenue, and that tells investors their AI strategy isn't just boosting sales, it's actually making the company more efficient and more profitable.
But okay, let's pull back for a second, because Intuit's moves are part of a much bigger earthquake that's shaking the entire tech world. AI is completely tearing up the old rules for the software as a service, or SaaS industry. The whole world of subscription software. Let's take a look at the new playbook everyone's starting to use.
Yeah, that old flat fee per user model, it's kind of on its way out. In its place, we're seeing 3 new pricing models take over. First, there's outcome-based, where you pay for a specific result, like an AI closing a support ticket for you. Second is consumption-based, so you pay for what you use, like API calls. And third, you have a hybrid model, which mixes a stable subscription fee with extra charges for those powerful AI features.
And it turns out, people are more than willing to pay up for these AI superpowers. Just look at these Copilot add-ons. Salesforce's AI, that's a 50% premium. Microsoft's, a 70% premium. And GitLab's AI tool more than doubles the subscription price. The message here is crystal clear. Businesses see a massive return on investment in AI-powered productivity.
So, with that whole industry shift in mind, let's bring it all back to Intuit. This gets us to the core dilemma for anyone thinking about investing in the company. How do you weigh the incredible promise of their AI growth engine against some pretty serious headwinds?
And this is really where the debate gets fun. On one side, you have the bulls. They see a clear path forward, AI is a proven growth driver, the financials look solid, and they can make more money from their existing customers. But on the other side, the bears are waving these big caution flags. They point to the volatility of Credit Karma, some sluggishness from MailChimp, and a slowdown in new customer growth.
It's a classic tug of war between potential and problems.
Now, that optimistic view is pretty compelling. One analyst model, just for example, projects a fair value for Intuit stock at over $805 a share. That suggests a potential 20% upside from where it's trading now.
But then, you zoom out and you look at what the broader market is thinking, and things get messy. Across 17 different analyst estimates, the fair value ranges from a pessimistic $482 all the way up to a bullish $823. That huge gap, that's not just a difference of opinion, that is a chasm of uncertainty. It shows that even the experts can't seem to agree on what Intuit's AI-powered future is actually worth.
So, at the end of the day, it all comes down to this. Intuit is betting its entire future on using AI to automate and simplify our financial lives. There is no question the technology is powerful. The real question is, as this whole revolution unfolds, who ultimately stands to profit more from it? The companies building the AI, or us, the customers who are using it?